Hello and welcome to the look ahead for Wednesday, the 24th of July, with me, Fiona Cincotta, Senior Market Analyst at City Index. So over in the European session, we'll be looking at German GfK consumer confidence. Then we'll have Eurozone and UK PMI data. In the US session, we've got US PMIs as well as the Bank of Canada interest rate decision. Also got earnings from the likes of IBM, AT&T, Ford, Deutsche Bank and Santander, and many others. So just let's start with the Bank of Canada. Interest rate decision tomorrow. The market's pricing in around a 91% probability that the Bank of Canada will cut interest rates by 25 basis points for a second straight meeting. They cut rates to the current level of 4.75% in June. They're expected to reduce rates by a further 25 basis points to 4.5% at this meeting. This comes as inflation is at 2.7%. That's between the Bank of England's target level of 1% to 3%. Now, we'll also get fresh forecasts from policymakers. We're expecting to see a downward revision potentially to the inflation forecast and also the growth forecast, which in April they were forecasting growth this year of 1.5%. So if we just have a look now at what's going on here with the US dollar, Canadian dollar. So if we have a look, we can see that the US dollar, Canadian dollar has actually risen from the July low that was around this 136 level. Now it's risen, and this is, as I said, on a sort of combination of the weaker Canadian dollar that we've seen as inflation's cooled and amid signs of weakness in the economy, and also falling oil prices. Oil's trading down at a 1 month low, but also combined with that strength in the US dollar that we saw last week as that sort of Trump trade and pushed treasury yields, longer term treasury yields higher, lifted the dollar on expectations of sort of the protectionist policies that a second term with President Trump may bring. So that's what sort of helped push this price higher of the pair. As I said, it's recovered from that 136 low. It's heading up towards here. This is the 137.90 level, sort of almost 138, which is the level that we saw. That's the June high. Now, if we have a rate cut, as I said, is pretty much priced in, but if we have dovish commentary as well from policymakers, then that could see the pair weaken further back up here towards the 2024 high, which is the 138.50 level. And for whatever reason, we hear some caution in the Bank of Canada and sort of their outlook, potentially not lowering inflation by as much as expected, or sort of, sounding quite cautious about further rate cuts this year, then the levels to be watching out for on the downside here is this 136.60 level. That's sort of a level that's offered some support across the way. It's also just around the 100 SMA, and then below that we've got the 136, which is the 200 SMA, as well as that July low. So that's what to be looking out for with the Bank of Canada. Whilst we're just talking about oil, I think it is worth just having a look at what's been going on with oil. As I said, it's trading down here at its lowest level in a month. Basically, what we've seen is this sort of fall off in oil. It's not really had too much to do with the Trump and Biden presidents race. In fact, it doesn't really seem to be affecting the oil markets that much at all. But we've had really concerns over the economic recovery in China. We've had sort of that weaker than expected Chinese GDP data. Since then, really, we've been seeing this decline in oil prices, taking out a couple of key levels there, the $80. And also this level here, the 77.50, which is a level that sort of, offered support on a couple of occasions across the year. Now that we've had a breakthrough there, I think it does open the door potentially to around 75 level, which could be here, and even down towards this level here, which would be the 73 or 72. it's around 72.80, which is the June low. So just seem to be careful. Momentum's on the side here. I mean, this is looking like it could go lower. We've obviously not had the inventory data, which is due shortly. And we've also got the EIA inventory data due tomorrow, so they could potentially boost or pull back, sort of drag oil lower. I think we're actually expecting inventories in the US to fall. So, as demand remains relatively strong there, but it's these concerns, as I said, over China, which really seem to be outweighing any sort of optimism regarding the outlook in the US. I'm just going to take a quick look now at sterling US dollar. As I said, we do have the PMI data for the UK and for Europe as well, in fact. And the data is actually quite similar from both, but I think the UK one will be particularly interesting. Given that sticky service sector inflation that we saw last week, still up 5.7%, and the prices paid element, subcomponent in the services PMI is going to be watched quite closely. Services PMI is expected to expand at a slightly faster pace in June. Manufacturing is also expected to expand at a slightly faster pace in June. So if we get stronger than expected data, that's going to be upbeat for the pound. And we could see sort of a rebound off this level here that we're watching at the moment. That's the 120 is 129, which is the March high. We've seen, we're just seeing that being tested at the moment. If we do get stronger than expected data, as I said, then we could see a retest of that 130 level. That's an area to be watching, but we're still within this rising channel within which we've been trading really since the mid-time in April. But if we do get a breakdown here on weaker than expected data, then we'll be watching out for around this level here, which is the 128. It's the level which has offered some resistance in recent months across this year. So they're the levels that I'll be watching. Same with the Eurozone. We are expecting to see sort of manufacturing PMI is at a contract at a slower pace, and the service sector to pick up slightly. Just going to have a quick look at what's going on in the euro US dollar. So yeah, it's trading very, very slightly within this slight rising channel that we're seeing here. Again, it's sort of reached that peak of 109.40. It's rebounded low. We've seen a fairly steep sell-off today. Just on strengthening again of the US dollar, but also ECB policymakers are starting to sort of point towards the fact that inflation is cooling in line with forecasts, and that that there could be a potential cut coming should the inflation continue to cool. We also have heard that there are signs of wage growth cooling. Now, obviously, wage growth has been a hurdle for the ECB as far as cutting rates further of concern. The ECB cut in June by 25 basis points. On the downside, looking for support here at 108. That's going to be a pretty key level. That's the 200 SMA. If we get a break below there, that pretty much negates that near-term uptrend that we've seen and potentially opens that door to 107. On the upside, level to watch 109.15. That was the high that we saw in June. So just about, I think we'll just have a look at one more, because obviously we've got US earnings season, which is going on. I'm doing this ahead of earnings from Alphabet and Tesla, which are due to be released after the close. But let's just take a quick look at the S&P 500, as we do have more earnings coming in tomorrow. So we can see that we are rebounded off that. Off the all-time high. Also, just working out, we've got the PMI data for the US. I actually expected to show that service sector grew at a slower pace, which will be interesting because that's in contrast to the Eurozone and UK, where we're expecting to see service sector expand at a faster pace. But yes, we've seen this drop down here. It broke below the rising trend line that dates back to May. Just trying to get back over that rising trend line, hasn't managed to do so yet. But if we get more strong earnings, if we get some strong numbers from Alphabet today, then that could be enough to get over there. But I think, these are the first two Magnificent Seven stocks reporting. They have lofty valuations, particularly Alphabet, just off its all-time high. So there are high expectations, and the market's going to want to be seeing that sort of the earnings are coming in to support those valuations. So that is all from me. I hope you like what you've seen. And if you would like to see more videos like this, then please do subscribe.